Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein with your weekend edition of your Metal Market Report for this Friday, the 24th of November, 2017. I'm putting this out at approximately 12:40. For all purposes, the markets are all done now. They'll be all closed within just minutes, and it's an interesting end to the week in the metal markets. Now, I do want to remind you that what I show you here, I teach in my charting course, and at the end of this video, I'll be taking you to the course. You might want to take advantage of this. It's a heck of a better Christmas gift to yourself or somebody else you know than going out and getting a sweater. In fact, I generally price it under the price of sweaters. I mean, that's what I'm trying to do. I'm trying to put knowledge in people's hands, and it's a great way to learn, and I'll get into that in a minute. So what we have today is the metals backing off, the copper market strong as can be. So what we can look back and say is in copper, that 305 area certainly provided the support, and now the market's coming back into resistance. We saw a good rally in the energies, and now we're hearing that at least going into the weekend that Russia is now getting the ink ready to sign on a document where they're going to join into the OPEC extension. How far they'll go and so on, I don't know, but that was late-breaking news. The dollar down as the currency market exploded and the euro against it as better things are happening for Miss Merkel. And at first, she couldn't put together that minority government or didn't want to. Well, all of a sudden, some of the different parties are approaching her. Maybe she won't have to call the election. But it's a fluid situation. In the meantime, you've gone from roughly 116 back into the 119. So it's a very, very strong situation. Tax reform this week. Big week for the tax reform bill. Does it or doesn't it get done? So those are the things you're going to watch. So let's take a look at gold on the monthly chart. And as I wrote in June, 6 months ago almost, I said the key to this market right now is that 18-month moving average. It doesn't seem to be able to get away from it. Guess what? It still hasn't. The proof is in looking where you're at. The red is the 18-month moving average. The green is the 100. So yes, you had one pop in the market and it fell right back to where you're at. When we go to a weekly area chart of closes, look at the 18-week moving average of closes and look where prices are. They're literally trading on it or just slightly under it. The most recent low was 1268.5. Now, 1289.5 is that 18-week average, and you're going to finish off this week around 1288, still slightly under it. This is a regular weekly bar chart, and when I put on it the swing line study, I still have the pattern of lower highs, but I do have a pattern of higher lows so far. It's in a stall. I'll give the benefit to the bears because you're under the 18-week moving average. Get up and over 1297 after a week like this, and what could happen is you can change this whole thing to higher lows and then a higher high. So if you were to ask me the number on a weekly basis that the chart cannot afford to take out, I'm going to take you to last week's high at 1297.50 and say that. It also implies to me that the bears should make their stand right here if they want to keep the momentum of this market down. If they can drive it down, a potential number could be 1251.80, the 100-week moving average of closes down to 1244.70. Take out 1297.50, you change again the swing line, and you might be talking 1334. In terms of momentum, it's flat. You can see that it just sort of died here in the 29 to 30 level. It just went flat on you at that point. And prices have really gone flat against the 18-week average of closes. So what I often do is I look to see, can the ETFs offer a clue on the market? And again, these are weekly charts with each bar representing a week, and I've got my swing line on it. And the pattern was, because you made a lower and low from here to there, we know that we've had the lower highs, but like the futures, you're gradually getting these higher and lows. What's the number that the bulls need to get to in order to think they've got the bears on the run. I think it's 123.17. You got to clear that number. If you do, you can start making an argument. You got your higher lows, higher highs over the 18-week average, and maybe momentum will pop on you then. Then I'm looking for 126.76. Don't have that happen, and you either keep treading water as you are, or if you break down, maybe you get to the lower Bollinger Band. The mining stocks, which I have often said to you lead everything, are doing nothing right here. You've still got the clear pattern of lower highs, lower lows. But just like on some of the others, if we look at the low right here, and let's come to it, if I can get, I can't get to it, unfortunately. I can't get this cursor to go that way. It's slightly lower than 22.34. If you take out 23.02, the last rally high, you're still under the 18-week average. This chart would need to do an awful lot to suddenly turn friendly, and unlike the others, it cannot end up with the pattern of higher lows and higher highs. That's what scares me. You'll still have the lower low here. Can you end up with the higher high? I don't know. In the silver battleground, the 100-day and the 18-day average of closes. Momentum slightly down. Market finished under the 18-week average of closes, so I'm going to call the bias down. The pattern is one of lower highs, but I have higher lows. Most of these markets are doing this. They're narrowing in for a move, and that's going to be the important part. There's no doubt in my mind, at least, that today, seeing the dollar get hurt as much as it did, it should have supported metals in terms of gold and silver. It did not. Not a pretty sign. In the copper market, on this whole break, you couldn't get back down to the 18-week moving average of closes. Now, the trend is not up in this market. The trend is measured by the swing line, still has lower highs, lower lows. This week's high was 317.60. You needed to take out 318.30 to break that pattern. However, countering that is the fact that the market has stayed over the 18-week average of closes, which means the bias is up. And as you can see, momentum has stopped its decline. Is it going to turn up there? Well, it's trying right on the close, and the red line is over the blue, so momentum could be said to have turned on that basis. In the platinum market, we have a pattern of higher lows, higher highs. Countering it as the market has stayed under this 18-week moving average. Should the market get over that, I would then argue that momentum will probably, just like it's doing, even increase a bit more to the upside. I would say that the bias would be up, and then 972.5, the 100-day average, would become the next resistance point. What the bears are trying to do is keep the market from taking out last week's high. We'll see if they're successful, but there's no reason to be bearish. There's reasons to consider that the bulls could take over control of that market. The palladium has been in the control of the bulls, and on my daily charts I've been pointing that out to you. You've had the higher lows, higher highs, bullish. You've had momentum up, bullish. But right now what's starting to happen is momentum is waning. This is a market that was staying up when the others weren't, and now you've got to be careful. If you take out 986.20, they could change the spread down with the platinum palladium, where the platinum market gets a little stronger than the palladium. The dollar index, as I've pointed out, is weak. It's under the 18-week average of closes. It's not trending. It has a pattern of a higher high and a lower low, but momentum is down, bias is down. This market's under the gun, and if they don't get tax reform bills moving on in some manner and pass, at least in the Senate, could be a very big problem for the dollar. They'll keep putting off the tail that they're going to get something done, and that'll move other currencies against it. Now, one of the things I love to do is teach. And I've put together a course that's based on online videos for you. And simply put, you see what I do, you do the same thing. And the course is framed around the idea that if you can understand 5 technical tools, each one built to filter on the next one, then you get a stepping ladder approach to the market. People ask me, well, Ira, do I have to follow what you're doing? I don't walk on water, friends. This is an idea and things that I've evolved to over a 40-year period, and yes, I do upgrade my courses on regular basis. I'm adding more this year. I'm going to be adding other studies that you'll be able to see and work with that are not part of the course, but things you might want to learn. At the end of the day, you're going to learn how to work with these lines, be them moving averages, window envelopes, that's the blue lines. The white lines are Bollinger Bands. You're going to put momentum with it, and you're going to have a game plan that you can work with. That is what I try to accomplish. It's meant for daily charts. It's really not meant for looking at the monthly charts and so on, but I apply everything I do in a way so that you learn to tie it all in. And then I give you the numbers you need to apply on a chart, so they'll be able to check back with your own numbers. I write about the markets typically twice a day. And Monday through Friday, I create a video in the morning where I review 40 charts. Now, included in the course, the charting software, if you've not used our charting software in the past, my research, if you're not using my research, I wanted you to see it. I'm able to time when the course begins. You want to buy it for a Christmas gift? You want to buy it now and use it after the beginning of the year? We can tie this all together. So you can either call us, you can go online, and if you go online, go under the education section of our brand new website. You'll really see how this is all spelled out. I'm Ira Epstein. You have a great weekend, and I will see you all Monday.